All right, guys and gals, time to get back to work here this evening. Monday evening, it's May the 18th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session, and I got a jam-packed video in store for you guys and gals tonight. As you can see in the background, charts are all prepped up in the background. Got some oil, we got the S&P, of course, and we'll grab some yellow metal, those gold futures on the video tonight. Before we jump in, though, I got a lot to cover here tonight. We'll check the calendar, the charts, a lot of great setups for Tuesday's trading session. Before we jump into the video tonight, though, I just want to remind you guys to make sure you subscribe to this YouTube channel. I don't want you to miss all the good stuff we publish every evening on this video. And don't forget, if you have any questions about anything we talk about in tonight's video, drop those questions in the comment section below. And as always, if you tune in every evening and watch this video newsletter, if you rely on this video to get your mind right and your charts right for tomorrow, hit that thumbs up button for me. As always, I appreciate you supporting this channel by subscribing, posting lots of great questions, and hitting that thumbs up button if you love the video presentation tonight here on our YouTube channel. But enough of the introduction, right? Back in the action. I'm a little bit behind schedule tonight here. Let's jump into the video tonight by jumping into the calendar for tomorrow. Taking a look here at the economic news calendar. What's on the schedule for tomorrow? Now, tomorrow is this week is a relatively quiet week. It's a holiday shortened week. We got the Memorial Day holiday weekend coming in on Friday. We'll talk about how that holiday plays in a little bit later on this week. But relatively quiet week here. Not a lot of huge news. We got big news, of course, tomorrow at 8:30 and at 10 o'clock. We've got a couple news events here on Wednesday. Some big stuff on Thursday morning. I've also got one on Thursday afternoon, and of course, an early close on Friday ahead of that holiday weekend. So we'll talk about the holiday, how that plays into us. It won't really affect us until Wednesday, Thursday afternoon here. We'll worry about tomorrow. Tomorrow, of course, is Tuesday. It's May the 19th. We've got two big news events you can see. You get the housing starts number at 8:30 Eastern time. That will hopefully kind of kick off tomorrow's trading session with some nice volume and volatility. But it looks like everyone tomorrow will have their eyes on Jerome Powell. Now, I don't think anybody is expecting any surprises from him. We heard from the Fed a few weeks ago talking about the coronavirus stimulus packages. He was also all over the television all weekend. I'm not sure if you saw some of the headlines, but I mean, he was on Sunday morning, Sunday evening. I think everybody at some point probably saw his face on the television at some point over the weekend talking about coronavirus, talking about the stimulus packages, which they're calling aid packages, by the way. Creative way of saying, right? Same old, right? They're putting easy money into the market. We'll call it a stimulus package. If you want to call it an aid package, call it if you want. But he already talked a lot about kind of what we would anticipate him talking about tomorrow as well. Now, keep in mind, tomorrow is a testimony on Capitol Hill in front of the Senate. Now, what this means is there's going to be two pieces to tomorrow's event. It's going to be a prepared statement between 10 o'clock and 10:15, and then, of course, you've got all of the back and forth questions from the panel of speakers right on the Senate floor. The most important thing is we oftentimes see quite a sharp reaction. 10:04, 10:05, 10:06, what's going to happen is he's going to start reading his prepared statement. Now, keep in mind, this statement has already been published already. Everybody already knows what he's going to say. But usually, you're going to see some response there in those first 15 to 25, 30 minutes afterwards. We're definitely going to be sitting on hands in our trade room tomorrow early in that 10 o'clock, right? But as we start getting, 10:15, 10:20, 10:30, hopefully he shakes things up enough to get us really starting to get some good setups. There's also potential that whatever he says tomorrow, could end up in some ranges. And so we do want to be aware of the potential for range-bound markets into the second half of the day tomorrow. So really, you almost want to think of tomorrow as before Powell and after Powell, right? You've got the BP and the AP. Before Powell, we'll get to our desks nice and early tomorrow, like we always do. We open up our trade room at 8 o'clock Eastern time, like clockwork every morning. We'll look for some setups beforehand. we'll definitely make sure we sit on hands right at the beginning of that 10 o'clock block, and then hopefully by 10:15, 10:20, we'll have some more good setups coming in thereafter. Maybe we see ranges, maybe we see breakouts, maybe we see big trends. We won't really know until we get there, but that's the basic lay of the land for tomorrow. Get to it early. Be aware of those first few minutes around 10 o'clock. And what we might see is, the NYC opens up at 9:30, right? So there may be a little bit of some sluggishness between 9:30 and 10 o'clock. It all depends. It all depends. We'll obviously be looking at that together in the trade room tomorrow. But after 10 o'clock, though, look for that very acute reaction to whatever he says tomorrow at 10 o'clock. And hopefully we'll get some nice setups going into lunchtime hour of 11:15, 11:30 from there. Now, don't forget, guys, tonight we'll put together our plan of attack on the charts here tonight, but don't forget, we're going to trade this stuff together tomorrow in our trade room. I would love to have you right there with me, trading right alongside us. To be a member, right? Got to be a member to get access to it. I'll put all the membership information for you guys inside the description of this YouTube video. So again, come join us tomorrow morning. You got to be a member to join the trade room. I'll put all the information for you guys in the description of this YouTube video. That way you don't miss a beat tomorrow and you're with us as we execute the strategy properly. We'll come back later on this week. We'll talk about our plan for the FOMC minutes. And then later on this week, we've got another one from Jerome Powell at 2:30. I'll talk about how that will likely play into the rest of this week. Lot going on this week. Tomorrow, though, Jerome Powell kicking things off here. Looking forward to a great day tomorrow in our trade room. Let's get the charts already, though. Let's get these charts all ready to rock and roll here, shall we? Looking at crude oil, S&P, and the gold tonight on the video. Let's jump first here into the oil market. On that black gold, the Texas T. And what do we know about the oil market here tonight? Kicking off this video newsletter. Well, most importantly, we know it's a bull market into a trading range. That's basically the nuts and bolts of this market right now. What does a trading range tell me to do? Range markets tell me to buy low, they tell me to sell high, and they tell me to avoid the middle. More importantly, range-bound markets tell me to focus on failures. So as the market goes lower, I focus on seller failures to buy higher, right? As the market goes higher, I focus on buyer failures to sell off the high, right? We, of course, avoid the middle. Buy low, sell high, and focus on failures. Now, what is really interesting about this chart is at first glance, it doesn't look much like a range-bound market until you look at the measured move. The measured move, I think, really was what really makes this range stand out, because you'll notice what happened at the end of the day. If you look at it, right, from my point of view at least, the market runs up and it runs basically right into that measured move. Then you'll notice it gets a little bit ahead of itself, right? It kind of pokes its head out, and you can definitely tell it regretted that decision because it got slammed right back down as we go again. Now, at first glance, this looks like just simply a seller failure pattern and a run back up to retest the high. But if you watch my newsletter, you know what I'm going to say right now. If the buyers really wanted this, they would have been right back at a retest that high here, right? They would be right back. I would be recording this video and we'd be sitting right at the high of day here right now if the buyers really, really were that strong. But look where they closed. They closed right at where? Surprise, surprise, at the measured move. So when you put it all together, when you see, in my opinion, that closing price just underneath that measured move, right, is really what kind of seals the deal here for us. It looks like they got a little bit too big for their britches. They went through the measured move, that got smacked for it, right, and it came tumbling back down. You can see the amount of the move above the range is pretty much equal to the amount of the move below the trading range. This really confirms for me we have a trading range on this chart. I've got double tops, I've got double bottoms, right? And you can see here, just by looking at the structure of it, it does look like this range is going to be the king or queen of this chart here for tomorrow. So knowing that range is there, now what I'm doing is I'm taking the size of that range, I'm finding my buy zones, I'm finding my sell zones, and I want to buy in the buy zones and sell in the sell zones, right? I want to buy low, I want to sell high, and I want to avoid the middle. Now, I can also tell too, it's obviously got a bull tone to it, right? We can easily see this market has an overall bullishness to it. So I'm also looking for levels of support that I can rely on. One of my favorite levels of support are these expanding triangles. As you can see, I've got that one drawn out. I've also got a level of resistance up here acting as an expanding triangle. I would love to get long off of the low of that expanding triangle. That would probably be the ideal buy location for tomorrow and take some profit off at those highs. Furthermore, you could definitely assume, if you want to be a seller, this would also be where a particular setup might be used to sell off of that high. And we'll talk about what that pattern might look like once we get to that point here in this video. So really trying to use the edges of this triangle. And of course, at the end of the day, too, we're seeing a lot of talk about the reopening of the economy. We heard today about a bunch of vaccines, different treatments coming out right now. I'll tell you right now, remember, this market was where $55-$60 a barrel before this whole, COVID-19, Chinese virus, Wuhan flu, whatever you're calling it these days, coronavirus, right? Whatever you're calling it, before this whole thing slammed the door shut on, air travel and car travel and everything else that oil, right, really relies on, we were at $55-$60 a barrel. So, hey, if the vaccine stuff keeps coming along, if the reopening of the economy keeps coming along, it does seem like the price of oil will get dragged right up with it. So we do want to be, right, we do want to be thinking about what does that breakout look like, right? What does a breakout look like? What if it keeps running higher here? We do want to be aware of that. And of course, we'll talk about reversals here as well. So like I mentioned earlier, what I really want to do here is I want to get down underneath this trading range and start looking to be a buyer on this. That's where I want to really focus my energy on for tomorrow. And really, it kind of all comes down to what type of pullback that we get. For example, do we sit here sideways for a while, right, and then make that move lower? Because if that's the case now, I can look for a pretty typical seller failure, right, into a bullish pullback pattern. I mean, that's about as simple and straightforward as you can get there. We'll wait for the price to pull back. We'll wait for those sellers, of course, right? The fact that the market goes lower will probably look like a reversal. It's a range, of course. It will be confirmed by this market, right? Going sideways again. So if we do go sideways in the range there, I'm looking for bears just to get caught trying to sell prematurely on that pullback and looking to buy into those stop losses. Oftentimes that market will then go up and then pull back again, and I can use it on a pullback pattern. So it's a simple seller failure right below the range inside my buy zones, right, into a bullish pullback pattern. That is something I am definitely watching here. Now, very, very similar, but a little bit different. If the market was to run going lower here, this will look a lot more like a reversal. And because of that, you know what I mean? Because in all reality, the range isn't that easy to see, right? You've really got to be in tune. Again, like I said earlier, if you don't know where that measured move is, right, and it's just the fact that it's sat at that measured move tells me if it's not a range, it's a hell of a lot of resistance right there. Either way, I don't want to be buying there. So if we do end up, for example, just basically going straight down here, right? If we just make a run going lower, this will feel very bearish. And that tells me that sellers are probably not going to give up that easily. In that case, I'm looking for one try for the bears. I'm looking for two try for the bears, and then I'll look to be a buyer, right? Now, this pattern, let me finish up the draw on this. This is what typically happens on this little beauty of a pattern. These are called nested failure patterns, by the way. And again, the whole prerequisite for this is it's got to just go straight down, right? Nice strong push down. Now, once you get that strong push down, what's going to happen is the bears will try once, but if they fail, they're probably not going to give up without a fight. They'll probably try, right, at a higher price there. What I like to do is draw a little trend line off those lows, right, and grab that thing off that trend line. We call these these nested failures. Strong move down, bears tried once, bears tried twice, and we're buying now, basically buying into stop losses, right? We know where their stops are. They'll be hanging out right above these highs, and we're just looking for a nice strong signal candle just to buy right into those stopolas, right? So once those stops get run, a lot of times it jumps. When it jumps, though, you don't want to chase after it, because whether it's a range up here or it's a resistance level up here, either way, I don't want to be chasing after it. So instead what I'll do is I look for another pattern. It's called the two-try trap pattern. One of my favorites, and usually these will come in off the low of like a little channel there, right? There'll usually be a little channel, right? Little support trend line off the highs there, off the lows, and we'll look for, again, they're trap patterns because you don't want to be buying too high, right, as the market goes higher. And of course, the idea here is, right, to get that moving average going through. A nested failure into a trap entry on the way back up to retest those highs as well, right? So that's definitely something that we are watching on the pullback. But like I said earlier, right, if the good news keeps on flowing, if the oil keeps on flowing, right, if the good news and the oil keep on flowing, we're probably going to see this thing keep going higher here, I would imagine. The problem is this failure to keep pushing really makes me worry, right? Because again, whether it's a range or it's resistance, I don't want to buy in this area. This is a really tough spot to convince me to get long. What I'll have to do is I'll have to see, first of all, some strength going higher. Then show me you mean it, right? Show me you really want this. The last time you pulled back, you fell on your face. Show me you really want this and can jump. If you can get a nice jump off that moving average, I call these 1, 2, 3 breakouts. 1, 2, 3 breakouts. If I can get a 1, 2, 3 breakout, I have nothing. I can't ignore that strength. I'm going to mark up that high. I'm going to mark up that low, and I'm looking for, right? I'm looking for that pullback, right? The buy off the low of that channel. Now, if things start really getting crazy, like really getting crazy, my next available objective is 35. In fact, 35, we've been talking about 35 for quite a while on this newsletter. If you look at a big, 4 hour or a day, or not maybe a daily chart, but a couple hour long chart, you'll see there's some major tops at 35 from the way we on the big drop going lower here. So again, I'm looking for that 1, 2, 3 breakout, mark the high, mark the low, buy the low. But if this thing just starts ripping and running higher here, keep your eyes open for that two-try trap pattern. The two-try trap pattern is actually a really simple pattern. It starts off with a strong spike higher. I don't chase after it. I'm not a big believer in chasing markets, because a lot of times you chase after it and what happens? It just comes right back against you again. It's very difficult to tell a successful breakout before it happens. You've got to be in it to make money off it because you get bad fills. I could write a book about why breakouts are one of the most insanely difficult things to make money long-term with. I've never been able to find a reliable way to predict breakouts. You've got to be in them already. You can't chase after them. I won't waste your time on telling you why they don't work. You probably already know for yourself already. That's why you're watching this video. The bottom line is strong move up, shallow pullback. Okay, that's the key. Shallow pullback, higher high, and then, of course, trap low. We call these two-try traps. I talked about this a few minutes ago on that nested back here, right? That little nested pattern back here is where it comes from. The bottom line is you do want to think, though, on these. Can I find some hidden channels here? Can I find some support levels there? Mwah, that's a beautiful pattern as well. So 1, 2, 3 breakouts, or, right, 2-try breakouts on the move higher. Now, guys, don't forget, we're going to trade all these patterns tomorrow in our trade room, and you can find all the information to get registered right in the description of the YouTube video. But if you're not with us tomorrow in the trade room for whatever reason, make sure at least you grab our free trading classes. I'll put a link up here for you guys in the upper right-hand corner. Grab that free trading course because you'll learn my 4 favorite setups, my 3-step strategy, the same strategy we use in our trade room, and I'll show you hundreds of examples of how we apply that strategy to our favorite markets. You got to grab the free trading course. It's linked up in the upper right-hand corner. Pause the video. It's worth getting your hands on that free course. It's very much worth it. Most people tell me it changes the way they look at the markets forever, and I hope you'll take advantage of it as well. And again, don't forget, I'll put all membership information, all the free class info, I'll put that right in the description of this video. Last but not least, though, how can we sell this market right now? There are two ways to sell this market reliably. One is a crown reversal off the top. Remember, if you are going to take a reversal pattern, there's a couple criteria you want to follow. First of all, reversals have to happen at major turning points, right? So they have to happen at a major turning point, the top of a market, right? Some major turning point, right? Not a fib. I would not recommend a fib level, right? That's a calculation, right? So Fibonacci levels, pivot point levels, moving averages. I'm not a big fan of putting my hard-earned money on the line with calculations, right? I like solid levels. So retesting a high, retesting a low. The closest thing I'll come to Fibonacci pullbacks is a measured move. I always joke around by saying my favorite Fibonacci extension is a 1.000, which, in case you're following along at home, is not a fib extension, right? It's kind of lumped into it. It's a measured move. Right? I don't mess around with 1.2. I don't mess around with all that extra stuff because, again, calculations, they're very, very difficult. Plus Fibonacci's, you never know what swings to use. Again, you got to be off a major turning point, major high, major low, major trend line. That's something you can buy or sell off of, right? Stuff like that. Okay. The second thing is you want to go kind of half size, right? Quarter size. These reversal patterns, I'm not trading a full size position. Okay, so I'm going to half size. I'm going to quarter size. Why? Because they're not as reliable. They never will be as reliable. You're going against the grain of this market, right? They're not going to be as a high winning percentage. You got to protect your capital. And the third big thing is if you're a rookie and you haven't been earning consistent profit yet, you got to stay away from these counter trend trades. Right? Reversals are not good for rookies because they're not going to give you those high winning percentages. Forget about the money if you're a new trader for a second. Because what matters the most is your reliable setups, your ability to be on the right side of the market more often than the wrong side of the market. Right? Forget about money at first. If you're a rookie, these are not going to be as reliable. You want to stay away from them unless you're making consistent profit already. Right? It's called a crown reversal pattern, and you're basically looking for the buyers taking once, trying twice, and then back down from there. Now, if you are a brand new trader, or right, you are just trying to dig yourself out of the red here this week, what's a more reliable sell setup right now? 1, strong move down. 2, pull back to the moving average. 3, break down from there. What do we call these? 1, 2, 3 breakouts. 1, 2, 3 reversals. What do we do with them? We mark the low, we mark the high, and we sell off the high. Where's my target on this? It's definitely that $30 a barrel area. Right? There appears to be a little weekend gap down there. What is it? $29.80 or so. But yeah, it's right there. $30 a barrel, $29.50 area, right? That low from today is certainly going to be on our radar here. So again, a crown reversal off the high. Be careful with those, especially those rookie traders out there. Or the strong move down. Remember, strong moves down is not enough because if you're going to take that pullback, right? How about this one right here? That was very strong too. And that one failed, didn't it? Why? It's a range. That's why it failed. It's also bullish, right? So don't be foolish. Don't get in too early on those. Wait for the pullback to the moving average, right? Look for that jump off the EMA, mark the low, mark the high, and then you can get short, right? Then you can trust it off the high of that channel. All right, guys, don't forget we talk about all the reversal patterns inside the free trading course. Make sure you grab it right while you have the chance to. Let's grab the S&P coming up next here, shall we? What do we know about the S&P? We broke down everything pretty well on the oil, right? Emini, what do we know right now? It's basically a spiking channel. Okay, that's the most important part of this chart. That's the meat and potatoes on this. It's a strong move up, right? And it's basically a spike in channel. It's kind of an odd way of drawing it, right? They draw off the highs, roll off the lows there, but it's a spike in channel, right? And one way or the other, spike in channel. Either it's a spike in channel there, or that's the only way to kind of make sense of it, unless, of course, there's a range here somewhere. And there might be a range, and that's part of what our analysis will prepare for going into tomorrow's trading session. Now, anytime I have a strong trend like this, I always like to use those what we call measured moves, right? I said earlier, right, my favorite Fibonacci level is a 1.000. That was a joke, right, based on a measured move. Only the geekiest of the technical analysis geeks will get that one. But the reality is you'll notice they never got their big measured move. They never got their triple measured move. Now, why do you think that is? Well, if you look at this chart on a bigger picture right now, if I go back in and I grab a 4-hour chart, here's a 4-hour chart on the old Emini. What do you see? Where are we? We're right up at the high of that big trading range, right? So this is a big deal. We didn't get that triple measured move. It looked like they would keep going forever today. We're right up at the high of that big trading range. Again, this is a 240-minute chart, otherwise known as a 4-hour chart. I don't like to use hour charts. I like to use minute charts because it strings together more reliable data, right? Hour-long charts are not going to give you using hourly data. Minute charts will give you minute data. It's refined data. It's just more accurate data. Bottom line, though, is we have that 4-hour chart, though, right? We're sitting right at those highs. That's what these red lines are for. So when I look at this, I think, okay, this was a really strong move. Obviously, everyone was all hyped up on the vaccine announcement they had overnight. They heard from Powell last night on 60 Minutes and Good Morning America, talking about how they don't even need negative interest rates. They got all this big bazookas for all the great stimulus plans they've got, right? So Powell threw gasoline on it. The vaccine announcement today threw gasoline on it. We've also heard we've from at least from where I'm standing, right? And you probably have heard the same thing. We've heard very little about the crushing second wave that was supposed to come washing ashore once states like Florida reopened and Texas reopened and Georgia, right? They're supposed to be getting crushed with new cases right now, and they haven't. And so this second wave of this virus hasn't quite shown up. It resulted in a big boon for oil, and it's definitely what really sent these markets pushing higher. So 1, 2, 3, what happened? What happened? I'll tell you what happened. The top of this big old range, right? The top of this 4-hour range is what happened. That's what happened overhead. So when I look at the chart and I see the big picture on this, I think, okay, I get it. There's a lot of resistance up here. Nobody wants to buy high. And the big clue is that spike in channel. Now, what does a spike in channel tell me to do? Spike in channels almost always will pull back right into the base of this channel. And I'll tell you, if I've talked about this once, I've talked about it probably a million times on this video. When a market spikes up and then starts going sideways, or not sideways, but it goes into a channel here, what you want to do is start up by drawing off those highs, draw off that low, and then just go back and find right where it goes into the spike. Right? It's called a spike in channel because it's going to spike into a channel. So find out where the base of that channel is. And then it's usually that first pullback, right? And that's the good stuff. That is usually the good stuff. Now, in this particular scenario, we're way up here. And so it definitely looks like there may be some short opportunities with the right setups, of course. There may be some selling opportunities here to be a short off the high, and then who knows, we may be able to get it right back up to run the race back to retest the high. It may also end up collapsing under its own weight as well. Those are some scenarios I'm looking for here right now. So when I look at my chart, I'm going to get rid of these measured moves so just can keep things simple here for us. When I look at my chart now, because you really could look at this just like this, really, right? I've got all this space, right? Look at that. You get all that space now down to that battle zone. So can I find some levels of resistance maybe I can use? What if I drew a channel off that, popped it up there. Could I sell off that high? I think that could be potential for me here. What if the market was to tumble lower? What would I do then? All right, I'll have to be careful there. I can't get too aggressive as the market goes lower because, again, I think you're going to see a lot of buyers coming in and trying to and get this thing back up to retest that high here. So that's the nuts and bolts, right, of what I'm thinking about. Now, couple things here. Let's start first with a buy side here because we are bullish. And really, I know I'm going to get a lot of flack on this, right, for not talking about this pullback. But the reality is, yes, I do want to buy the low of this channel, right? I do want to buy the low of this channel, but I'm worried about all that resistance, right? If you missed it earlier, right, we're right there right now. Okay, we're right at these tops here right now. It's not a great spot to be thinking about getting long here, unfortunately. So if I did want to buy right now, what would be the most reliable and really the most conservative, right, way to get me in long to anticipate the onslaught of sellers that I think might be waiting right around the corner here? Well, the reality is I want to use a nested failure pattern, but I'm going to go one step further and look for a trap. I'm going to wait for the bears to come in and try to sell off the moving average. Then I would expect you're going to see more bears coming in and selling off this hidden channel. What I want is I want to get that trap. If I can get that trap low, right, that would be the ideal scenario here to be a buyer in the short term. Right? Again, this is a very specific pattern here though, right? The bears try once, the bears try twice, trap low. Now, another pattern I'm watching for here would be if we don't get that 2 try right away. It goes 1 try, it goes up. You know what I'm going to say, right? Draw that trend line over. Now I got bears trying once, bears trying twice. That would be another pattern I'm watching for right now. But that's going to be a lot wider, right? It'll go up. The bears will try once. It'll go up again. And at that point now, it'll be obvious the bulls are just too strong for these bears. And I don't want to buy high though. That's the problem. You don't want to buy right into that high. Right? I'm going to buy it off that pullback. Those are my 2 favorites in a very shallow pullback here right now. And as you can see, they're very similar, but they're very different, right? One of them is right on top of each other. 1 and 2. Very close, right? Very close quarters there for that trap. The other one will be more drawn out. 1, go up, pull back, draw that trend line over. I'm always trying to buy at support. And that's an easy way to buy at support while giving those sellers the benefit of the doubt because of where we are on that 4 hour. Okay? Now, I would also be looking for a range here too. And this is pretty likely, in my opinion. In fact, I almost put it right on here ahead of time. But there may be a range, and we may start seeing go sideways here, right? Now, if it starts to go sideways instead of a range, now what you want to do is measure. And unfortunately, we don't know exactly how big that range is yet. But remember how on oil, I took the amount of the move above and project it down below? That's the same technique I'm going to use here on the S&P. So if the S&P, if they open up and start going sideways here, get that on there real fast. Thanks for your time on this. I appreciate it. Right? If we start going sideways here, now what I want to do is I want to start to find that what I call the pendulum swing. Mark that high, mark that low. That's going to give me now that key support. And what do we do with that key support? We want to be a buyer, but what's the best of a failure? I gave it away. What's the best of an entry pattern in a range? Failures. Wait for that strong move down. Don't just pick a bottom on this. You don't want to pick a bottom on this because all of that momentum is likely now going to come over, right? And the bears will come in and try to run you out. Now, you know what's going to happen, right? If you don't try to pick the bottom, you'll get your typical, right, seller failure and go right back up, right? If you do not try to pick the bottom on this and you do your job correctly, you know what's going to happen. You'll get that nice seller failure and that snap right back up into the range. But you know the markets. They get a sick sense of humor. In fact, they love to mess with us, right? So if you did pick the bottom on that, if you did try to buy that, right, that dip like this, you know what's going to happen? It's going to come right back. It's going to stop you out. And as it's laughing right in your face, it's going to run right without you. That's why I wait for that failure pattern. Because I'll tell you, every time I try to pick a pullback like that, right, pick that bottom, it's like the markets go, okay, boys and girls, he's in, run him out, right? And they come. It's almost like they can see me, right? What that stop is. It's obviously not me, right? It's the way the markets work. At least I don't think there's some Wizard of Oz back there just messing with me, right? I must have done something in a previous life. I'm paying for now. But all kidding aside, though, that failure pattern will solve that problem, right? We don't pick tops and bottoms. We anticipate tops and bottoms, and we wait for the breakout sellers here, right? The breakout pullback sellers to commit so we can then know exactly where our entry should be. There's very little guesswork when you do it that way. Does that make sense? Right? If that makes sense on there, right, hit that thumbs up button for me if you've had that problem, right, happen. How about hashtag light bulb moment, right? Hashtag light bulb moment in the comments section. I'll bet a lot of folks are going, ding, you're right. Why should I pick the bottom, wait for the failure, and buy it there? Yeah, every once in a while you'll get one of these. It'll go straight down and straight back up. And, yeah, good for you. Pick the bottom on that. But those aren't going to happen. They're very rare, right? They're very rare. Usually they get to go down. It'll roll over. Maybe it stops you out. Maybe it doesn't. I don't want to play that game. I want to buy right into those stop losses. It's so much easier. So if we do see a range, right? That is an option I'm watching here as well. Now, another setup I'm watching right now is what if we do get that big move down inside of that range? How do I trade it now? Well, remember, at this point now, this market will feel very, very bearish. What's the best way to buy in those really deep pullbacks? There's two patterns. We just talked about them. One of them is going to be a nested, right? One of them will be that big wide, right? That big wide nested failure pattern, which we saw a lot last week, as you may recall, right? I think we saw 3 or 4 of those last week here, right? So big, deep pullback. Again, I'm not trying to pick the bottom on this. I'm waiting for 1, I'm waiting for 2, and then going up from there. Or we may also see it pull back. Moving average comes over. These are usually a little bit more on top of each other, right? With 1 try, with 2 try, and a trap low. These are usually a lot more condensed. And remember, anytime you have a nested failure pattern where the bears try twice, when they fail, these things oftentimes really race higher. And when they race higher, watch for that 2-try trap. The 2-try trap is really common after these deep pullbacks. Remember the 2-try trap? Strong move up, shallow pullback, higher high, trap low. Right? That will be a great one there as well for us. Hopefully we can get both of those on that nice deep pullback. Because as you can see, there's a lot of open space at that point back up to retest that high. And remember, on those follow-up setups, keep your eyes open for those hidden channels. Those are very common after a nested 2-try failure. All right, so will the buyers hold it? Will they fail? We're going to find out here. How about the sell side here right now? Right? How about the sellers here? Well, first of all, right, if I can get back up, if I adjust this channel here real quickly, if I go out and draw that, right, channel there, perfect. That'd be kind of an updated version of that channel. How could I sell this thing? One option would be to anticipate this going higher, right? Buyers now, right, are in control of this market. It's a bull market. So what's the best way for me to want to be a seller in a bull market? Wait for the buyers to try once, wait for them to try twice, and because I'm going against the trend here, right, I would like to get a trap off of that high. This is the same nested failure pattern, but because I'm going against that trend, it's basically a crown reversal pattern, and I'm leveraging this hidden channel to get that job done, right? That's basically what I'm doing here. That is going to be, right, my favorite way to sell this thing short. Now, if it may also show me up, right? It may also make a strong run lower. And if that's the case, before we get down into that battle zone down there, I'm going to look and see if I can get short right, off of the high of that hidden channel. This is going to be all about timing, right? This will all be about timing, right? So they do make that jump up. They jump off the high. We mark up that new channel, mark up off that low, right? And I'm selling off the high of that hidden channel. And then again, we might find ourselves all the way back down here, and then right, and then 1, and then 2. Draw that that trend line, and we get that nested failure as we go. So if we're trying to sell short as the market goes lower, just be careful, right? Just be careful here because we've got that buy zone down there at 29.26. So we're looking great here right now. I would imagine you're going to see a lot of bears waiting up at the top of this hidden channel. Can we get some buyers trying and swinging for a nice short off that high? We shall see. Or will we just collapse off that high, mark that low, mark that high, right, and get short off that new hidden channel? We've got a great plan here for tomorrow. What if it keeps going higher, though, right? What if it blasts? It looks pretty good right now, opening up in Asia. Right? But it blasts higher. Strong move up, okay. Pull back to the moving average. You got it. And a hold, right? Remember, it's got to hold and really run. If they hold and run, bingo. Mark up that low, mark up that high, and buy the pullback off that hidden channel, right? So I'm not afraid of buying a breakout, but I'm not going to try to predict that breakout because, again, we see situations all the time where the market will jump up, and then just as soon as it jumped up, it comes right back down again. We can't just blindly buy those breakouts going higher. Tomorrow morning in the trade room, looking forward to the S&P. S&P had a great week last week. Hopefully we get some more of these setups in motion tomorrow. And don't forget, 8 o'clock Eastern time. We'll do it together tomorrow in the trade room. Let's grab some gold here to wrap this video up. How's the yellow metal treating us here tonight? What is the yellow metal doing? Well, we know right now the market is bearish into a trading range. That's the most important piece of this puzzle. Strong move down, and it looks like they kind of finished up the session there, right, inside of a little triangle there or inside of a rectangle. It's a trading range. What do we do in a range-bound market? We buy low, we sell high, we avoid the middle, of course. We also see the bears have control on this, right? So it's probably a better idea for me to focus on being a seller instead of being a buyer, right? Probably a good idea to focus in a bear momentum market like this. Focus on selling above the top of that trading range. You'll also notice here I've got 1, 2, and 3 legs down. If you watch this video newsletter, you already know that when a market goes 3 legs in one direction, it does usually go sideways for a short period of time, oftentimes the entire following day. So we definitely have a range on this. It makes sense that there's a range. We're bearish. I want to be a seller. Where's the best place to sell when it comes to a range-bound market? Up at levels of resistance. Where can I find levels of resistance? Well, first of all, I've taken the size of that range. Like always, I use that to find my buy zones. Most importantly, I use that to find my sell zones overhead. Okay, another piece of the puzzle, got that major swing overhead. My plan for a range-bound market is to buy low and sell high. If I was to go into more detail on that, I would want to buy low at support, and I would want to sell high at resistance, right? So when I say a range-bound market tells me to buy low, sell high, that is the very basic way of describing it. In all reality, it is I want to buy low at a support level, and I want to sell high at a resistance level. And of course, I'd like to find some swings up around those highs. I also like the idea of marking up those lows up to those highs and using that now as a key level of resistance, right? That is a great spot there for us as well. So a lot of really great stuff to look for. Lots of resistance levels here on this gold chart right now that we can use. So options really are, do we see the market pull back into the first buy zone? Do they pull back all the way up? For example, we got that weekend gap. Big obvious weekend gap right there. That might be the biggest clue on this chart for tomorrow. So we do want to be ready for a very large pullback, and also be ready here for the market going sideways, and if that market makes a nosedive going lower here. So first of all, I've got this Let me pop that on right there, right? This is going to be a very important area of resistance. One option here is pretty simple. We go up around that 47.1. The buyers come over. They try to buy the pullback, right, off the moving average, thinking this thing is a reversal. And of course, once they commit to the entry, now I know where their stops are. I know where their pain is. And now I can literally sell right into those stop losses, right? For a buyer failure pattern, selling literally into those stop losses. A very easy pattern, right, to get your arms around because it makes sense. We go above the moving average, buyers to buy it. They're walking right into resistance above the top of a range. It's a great spot to look for a sell setup. And again, we're not trying to predict that top. The other scenario would be, do we really make a run here, right? Up into that weekend gap, up into the high of that channel. If we really make a big run, what's the best pattern to use on this? It's a failure because it's a range, but at the same time, though, it's a nested failure because momentum becomes a big part of this. So as we go higher here, I'm waiting for one try for the bulls, waiting for two try for the bulls. Once I've got those buyers trying twice now, let's draw a little trend line off those highs there, right, and look for that short. And what you're doing really is you're simply identifying the aggressive buyers getting in, the more conservative buyers getting in, professional buyers getting in at a deeper pullback, and then looking to run them out and selling right into those stop losses. Also, to remember, a lot of times those failure patterns, they run. And when they run, don't chase after them. Right? Rather than trying to chase after that nested failure, look for that trap and stay out of trouble by staying away from that trading range. So again, buyers try once, buyers try twice, use that level of resistance, sell that trap high or sell that off top of that range or top of that trend line, I should say, and of course the trap high that follows it. It may also be a little more condensed, right? We go up, buyers try once, buyers try twice. This is always my favorite. My favorite one is always the trap high. We don't get it all the time, but that is by far my favorite. And again, that would be assuming they get that big pop, right? That nice big pop up around the weekend gap, up around the high of that hidden channel. Those are two really reliable setups I'm watching for. Now, I also be ready too is if you look lower here, that 1700 down there looks really lonely. It could use some companions, right? It could use some friends down there. I wouldn't be surprised if the good stuff keeps on flowing and the virus stays away. We may definitely see, right, a strong move lower as the shelter market is not necessarily needed any longer. 1, 2, 3 breakout. I'm not trying to predict that first breakdown. I'm not trying to sell that pullback. It finished off in a range. We're 3 legs down. I've got to wait for a strong move. Then show me you mean it, right? Show me you mean it and give me some proof off the moving average. Once I have that, I can mark that low. I can mark that high. I can find that hidden channel now. And now we're in a much better spot to be selling than trying to call that first one. Right? What I'd rather do is on that first one, again, that's a breakout, 1, 2, 3 breakout into hidden channel pullback. If we do go down to that low, what can I do on that first pullback? I can buy it with a crown reversal pattern, right? I can look for that crown reversal and I can buy off of that low. Now remember, like I mentioned earlier, okay, when you try to go against trends like this, you got to do them at a major turning point, right? Again, we're 3 legs down. We do expect there to be some profit taking. We're underneath the low of that range, inside the buy zone there, off the low of that channel, right? Remember though, go half size, go quarter size, go 1 contract for crying out loud, right? And we're literally waiting for the aggressive sellers to try once, the more patient sellers to try twice. Once we get the little trap low, we can be a buyer right off of that low here. That should be a pretty easy one, right? That should be a pretty easy pattern as long as you wait for it. Okay. What I'd also like to get here is a straight 1, 2 the reversal, right? That'd be great. Strong move up, pull back to that moving average, jump off the moving average. Sounds good to me. Again, I have no interest in buying that first pullback. It's not very trustworthy. But once I do get that 1, 2, 3 breakout, now I can mark up that high. I can mark up that low. And I can now look to buy off the low of that hidden channel. Now, keep in mind, when I say buy the low of that hidden channel, a lot of times that is actually a seller failure into a pullback going higher, right? Imagine if I could zoom in on that area, right? It's usually going to be a seller failure pattern into a pullback pattern, right, for that rally off the low of that channel. And of course, my target at that point is back up to that 1775 area, up around the high of that trading range. So looking right now to sell off levels of resistance with failures and nested failures. Don't forget to make sure you grab that free trading course. Drop those questions in the comment section below, but no matter what, make sure you come out and join us tomorrow morning and every morning in the trade room. As always, I'll put all the membership information, all the registration information down in the description of this YouTube video. If you're on the blog at Sideways Markets right now, there's a big blue button for you right below the video on the trading blog. Don't be afraid to call me tonight if you have any questions. We got a lot of different options. We got some one-time options, some easy pay options, some bonuses going on in the month of May, almost in the month of July. We're not quite there yet, right? In the month of May. So definitely call the office if you have any questions. If the phone isn't a good fit for you, use the live support tool on the right-hand side of the website. And as always, if you're not quite ready yet for membership tomorrow to the trade room, at the very least, grab the free trading course as part of the free trial. Learn the strategy. So tomorrow night, when you come back, you'll know exactly what I'm talking about when I say failures and pullbacks and traps and ranges and breakouts and all the good stuff that we talk about every evening on this video. Guys and gals, as always, I really appreciate your time on these nightly newsletters. Thank you so much for carving out an hour or so with me every evening. Now, enjoy the rest of your evening. Share this video with a friend. Hit that thumbs up button for me. I hope you have subscribed to the channel already, and I'll see you guys tomorrow morning at the opening bell in the trade room. If not, come back and join us tomorrow night in the next edition of this nightly newsletter. My name is Joseph, by the way, and as always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.